Let's have a look at the gold miners. So first off, read this disclaimer carefully. Then do your good deed of today by liking and subscribing. So it's in the sectors, basic materials, and 2.46% here from the 52-week low, 27-ish% away from the highs. So we will look at the GDX, the VanEck Gold Miners ETF. So as we can see, it is pretty far away from the highs. It is at support, but it's not like at safe and sound support. Yeah, you could certainly begin drawing here and say that this is a shoulder, this is a big head, this is a right shoulder. So we do have a head and shoulders pattern, but it's head and shoulders at a low. So it's a bit of a strange one at that. Now you also have a head and shoulders pattern here. So the thing is that this isn't super bullish, but we are at support, horizontal support, that is. So let me draw that in. We have some support back here and also back here. Some support. But this isn't like super strong support. But there is support. Yeah, let's also look here at the dailies. We have recently seen, if we go here, so it does have a bit of a tendency to bounce a bit from support. Begging the question, okay, will we see something now? So from a seasonality perspective, we will see something a bit more interesting, a bit more bullish, but when we look here at RSI and PPOs, we are at an RSI level that has triggered bounces in the past. On the dailies, it is also interesting. So there is something here. So from a technical standpoint, we do have horizontal support. To give it a rating, I would give it I'd give it a 4 out of 9. It is bullish, but this isn't like super strong support. Hence, as far as the stop loss go, maybe use the levels back here. So maybe, yeah, 3% stop loss level. And that's kind of it with this one. Given that it is at a bit of a dangerous point technically. The seasonality is more bullish. You see here to the left, the trend over the last 5 years in green, 7 years in blue, and 10 years in red. So there is a bullish trend heading into later April. Looking to the right here with the table view, the coming month, March, going back to 2016, it actually is pretty bullish. Only 2020 was a down year. And you see that 2023, 2022 were really bullish. So March, definitively. That is pretty darn bullish. I think I will give it the bulls a 7 here on seasonality. So in combination with horizontal support, pretty interesting setup. Let's compare GDX with the XME, which is the metals and mining ETF. So if we go here and look at the performance, year to date, 15% loss for GDX. XME is at 5.7-ish. Well, precisely. Beta, 0.77 for GDX. XME is much higher at 1.48. Just because GDX has a low beta does not mean that it's like a bed of roses. Like it's been a frustrating trade for both bulls and the bears. Yield 1.9% versus 1.06. So there is some yield here, but nothing like spectacular. PE 22.43 versus 9.17. Here are the holdings. Yeah, further breakdown, large caps, small caps. So when it comes to the fundamentals, it is good to get some yield, Then again, the PE was, it was not like low either. So there's that. So in this case, I do think I will give yeah, -1 here for the bears. Next off, we will look at relative performance. So we will compare GDX with XME, Metals and Mining ETF, and we might as well also compare it to gold, GLD, like that. So long term, we do see that there is an 18% correlation with S&P 500 using weekly data points. When we look at the XME, we do see 5% correlation, positive, 33% with gold, GLD. Daily data points, -5% with S&P 500, 22% with XME, and 37% with gold. So looking short and long term, the strongest correlation we do get is with gold, but it isn't as strong as you might expect. It was there, but it was quite modest. So here we have the chart for gold. You could make the case that gold might do a big breakout. The things that we have been basing, we did base also around here. You see that this pattern and this pattern is similar, but the basing here has been taking a long time, much longer. In the process, we have formed a massive long-term inverse head and shoulders pattern. So I do think that given the global economy, with all the debt, with all of the risk factors, yeah, we do have the a brewing conflict potentially between NATO and Russia. There's a lot of things happening now that could definitively increase the interest in safe havens like gold. So yeah, I do think that this could turn out to a big breakout. However, this setup has taken a long time, and yeah, those who waited, they had to be quite patient. So if you bought around here, you would have a big gain, but still 517 days since that. So yeah, if we look at the seasonality of gold, it is somewhat bullish. March recently been more bullish than bearish, but when we go back to 2017, then it wasn't that good. Before 2017, that is, and also 2017. So yeah, gold, it's been there's been challenges. Okay, so let's now compare the GDX with the GLD, like that. So we see here that the GDX, it has substantially underperformed gold. We aren't at like must buy RSI levels yet on the weeklies, but relatively close. And there's been times in the past, like here and here, where the current RSI level was pretty interesting. Looking at the dailies, a bit similar message. We aren't at that super interesting RSI level yet, but pretty close. Yeah, the thing is that when you wait for like the perfect setup, sometimes like it doesn't happen. And yeah, if you want to get into GDX, yeah, I think that now is an interesting opportunity. There could be a better opportunity though on the horizon, but that is like there could be. So looking at the seasonality between GDX and gold, we do see that GDX has a tendency to outperform gold leading up into later March, which is definitively quite interesting. Looking at March in the table view, going back to 2016, GDX has a pretty strong tendency to outperform gold. So yeah, when it comes to relative performance, it's pretty interesting. It's not like a screaming buy, but I will give the bulls a 5 on this one. Especially the seasonality was very favorable to GDX. So we are at horizontal support. We do see that the seasonality is pretty promising, which could strengthen the context in the technicals. Fundamentals could be better, but the PE has gotten a haircut along with the pullback, so the PE has improved also from a fundamental perspective. So all things considered, I do think this is an interesting time to look at GDX. Beyond the factors we looked at, you do have the entire global economy, the geopolitics and all of that. That definitively could lead to a spike in the interest in gold. When it comes to gold and the gold miners, it's very important to be very analytical, because there is like a section in the investing community that is very fond of precious metals and will be bullish no matter what. And that is definitively a mentality that can be quite costly with everything, right? It's, you want to buy low and sell high. However, in this context, where we did an objective analysis of these securities, I do think that there's more reasons to be bullish than bearish. When it comes to a stop loss level, if you are more like an intermediate or short-term trader, I think a 3% stop loss would make sense for the GDX, because then it would break that horizontal support, which it isn't supposed, right, to break that support, given the other bullish factors we found. So if it does break, then that's not good, obviously. If you have a longer term horizon, I do think that this is just a pretty interesting time to build some position in GDX. We are pretty low, and there's quite a few factors that could be quite bullish. And when it comes to buying low and selling high, you definitively are not at like a major risk of buying high here on GDX. But yeah, have a great week ahead and stay tuned for more.